We all want to make smart decisions with our money, especially in today's fast-changing world. It seems like there are countless ways to grow your wealth, but not all investments are created equal. In fact, some can seriously backfire, draining your hard-earned cash and leaving you with regrets. Today, we're talking about the 3 worst investments you can make right now. These are the ones you should avoid if you want to protect and grow your money. Ready to save yourself from some costly mistakes? Let's get into it. Don't forget to subscribe to our channel. Let's get started. Investment 3. Penny stocks. You've probably heard stories of people striking it rich with penny stocks. It's an exciting idea, right? You buy shares of some tiny unknown company for just a few cents, and then, bam! The stock skyrockets and you've made a fortune. But let's be real for a second. While that story gets a lot of attention, it's usually the exception, not the rule. Penny stocks, by definition, are shares of small companies that trade for less than $5 a share. And while the price tag may seem attractive, the truth is, most penny stocks are super risky. Why? For one, they're often tied to companies with little or no proven track record. They might be new, struggling, or in some obscure industry. In many cases, there's very little information available about the company's financial health, making it nearly impossible for you to know whether the business is even viable. Even worse, penny stocks are typically traded on smaller, less regulated exchanges, meaning the market for these stocks can be easily manipulated. There's a classic scam known as pump and dump, where a group of investors buys up a ton of a cheap stock, hypes it up, causing the price to spike, and then sells it at the peak. This leaves everyday investors, who got in late, holding the bag when the stock crashes. Sure, it's possible to make money with penny stocks, but the odds are stacked against you. You're essentially gambling rather than investing. Unless you have deep insider knowledge, you're better off staying far away from these volatile, low-liquidity stocks. The reality is, if a company's stock is worth pennies, there's probably a reason for that. Investment 2. Timeshares. Let's talk about timeshares. One of those investments that seem like a good deal on the surface, but often turn out to be financial traps. You've probably seen the glossy brochures promising luxurious vacations in a tropical paradise for a fraction of the price. A timeshare is essentially a shared ownership model where you buy the right to use a vacation property for a set amount of time each year, typically a week or 2. But while it sounds appealing, timeshares are almost always a terrible investment. For starters, timeshares are notorious for their aggressive and misleading sales tactics. People get sucked in by free vacations or gifts, only to find themselves signing contracts they don't fully understand. What they don't tell you up front is that the value of a timeshare plummets the minute you buy it. Unlike a home, which can appreciate in value, timeshares are more like cars. They depreciate rapidly. Good luck trying to sell your timeshare later, because the resale market is practically non-existent. In fact, many people end up having to sell their timeshares for a fraction of what they paid, or even give them away just to escape the ongoing fees. And speaking of fees, timeshares come with hefty maintenance costs. Even if you don't use the property in a given year, you're still on the hook for annual maintenance fees, which can increase over time. You may also face special assessments for property improvements. These costs can quickly add up, turning what seemed like a budget-friendly vacation option into a financial burden. Moreover, timeshares offer very little flexibility. You're typically locked into a specific week and location each year, and trading for other times or destinations is often a hassle and comes with additional fees. If your vacation plans change, you're stuck with a property that's more of a liability than an asset. Investing in a timeshare is one of the worst ways to spend your money, because it's not really an investment at all. You're paying for the right to use a property, not to own something of value. You'd be better off renting a vacation home when you need one, without the ongoing headaches and financial obligations of a timeshare. Avoid investment 1. Cryptocurrencies, with no real use case. Let's talk about the cryptocurrency craze. Now, we've all seen the wild headlines. Bitcoin hits new all-time high, or this coin made someone a millionaire overnight. And don't get me wrong, the crypto world has made some people rich. But here's where things get tricky. Not all cryptocurrencies are created equal. And in 2025, you need to be smarter than ever about where you put your money. You see, the rise of cryptocurrencies has opened the door for thousands of new coins to flood the market. It feels like every week, there's a new cryptocurrency that promises to be the next Bitcoin. But the harsh reality? Most of these coins are nothing more than hype. So what's the big problem? It boils down to one thing: use case. In simple terms, does the cryptocurrency actually solve a real problem, or is it just a speculative asset with no real-world value? In 2025, the coins that will survive and thrive are those that offer a legitimate solution, whether it's improving payment systems, enhancing security, or making financial transactions faster and cheaper. Let's break this down. Bitcoin, for example, has a well-defined use case. It's often called digital gold because it's seen as a store of value, similar to gold, and is widely used in peer-to-peer transactions. Ethereum, on the other hand, supports smart contracts, which are revolutionizing industries like finance, real estate, and supply chain management. These are examples of cryptocurrencies with solid, real-world applications. Now, contrast that with coins that have no clear purpose. These are often called meme coins, or pump and dump schemes, designed to lure in investors with the promise of quick riches. Dogecoin is a famous example. It started as a joke, literally, and while it gained attention due to social media hype, it lacks the same solid use cases as Bitcoin or Ethereum. Its value fluctuates wildly, not because it's solving a real-world problem, but because of internet memes and celebrity endorsements. This doesn't mean people haven't made money off it, but it's pure speculation rather than investment. In 2025, we're going to see more cryptocurrencies that try to ride the wave of excitement, promising massive returns without offering any real value to users. These are the coins you need to avoid like the plague. If a cryptocurrency can't explain what it does in a sentence or two, and how it's different from the thousands of other coins out there, it's a major red flag. Here's the thing, as the world of crypto matures, we'll see a crypto winter for projects that lack real utility. Regulatory bodies are also catching up, and they're starting to crack down on fraudulent and unstable projects. In fact, governments around the world are beginning to implement stricter guidelines for cryptocurrencies. So, by 2025, coins with no real use case will either collapse under their own weight or be regulated out of existence. That's why, if you're considering getting into crypto, you need to be extremely cautious. Always do your research, look into the technology behind the coin, the problem it claims to solve, and whether it has the potential to last. Is the coin built on solid blockchain technology? Does it have a strong development team? And perhaps most importantly, is there demand for what it's offering? And let's be real, there are red flags that should make you walk away. If a coin is being promoted through aggressive social media campaigns with promises of guaranteed returns, that's a huge warning sign. Or if it's being heavily pushed by influencers who don't have a deep understanding of finance or technology, tread carefully. These coins rely on hype to drive up the price, but once the excitement fades, so does the value. So, there you have it, the 3 worst investments you can make right now. To recap, penny stocks may look like a quick way to cash in, but they're more of a gamble than a solid investment. Timeshares might promise the vacation of your dreams, but they often become financial nightmares. And speculative cryptocurrencies with no real value are a dangerous bet in an already volatile market. Investing is about growing your wealth over time, not chasing after the next shiny thing or falling for get-rich-quick schemes. The best strategy? Stick to investments with real long-term value. Focus on building a diversified portfolio and be patient. If you avoid these common traps, you'll set yourself up for financial success rather than financial regret. And before you go, don't forget to subscribe. We've got plenty more videos to help you make smart, informed decisions with your money. Thanks for watching, and we'll see you in the next one.